Good. All right. Good morning, everybody. So, real quick, table of contents, what I'm going to discuss today and how it's going to impact the market. First, yield curves. Then I'm going to talk about how the SPY had an inside day yesterday and that it is poised for a breakout. We've got the Fed's decision, 75 basis points coming tomorrow, Wednesday, and then we have a press conference on Thursday, okay? I'm going to mention my 3 trades for yesterday, my new challenge, $500, going to take it to 10,000 by the end of the year. That's the goal, which leaves me 2 months, which is about 38 trading days. I'm going to talk about some earnings that came out this morning and some stocks on my watch list and how each of the stocks should react according to the market. And then I'm going to talk about the SPY range and what to expect from the market, because you have to play the SPY in order to understand support and resistance levels. So let's get right into it. First, I mentioned I was going to talk about yield curves. So understand, as the yield curves go up, it makes it more expensive for our markets. The other catch is, as yield curves go up, when companies need to refinance their debt, and there's 11 trillion US and 11 trillion corporate debt overseas, right? When they need to refinance their debt, they have to look at the 2-year interest rate. So as that goes up, it makes it more expensive on our markets. Plus, it hurts the earnings for these companies that have corporate debt. So the interest rate does affect companies that you own and invest in. So let's go to the 2-year real quick. The 2-year was 144 yesterday. 444 yesterday. It's 443 today, down 1 basis points. Now here's the catch. The 10-year yesterday was 407. Then it dropped to 404. Now, when the markets dropped at 3 p.m., the 10-year spiked back to 409. Where is it this morning? It's 3.95. The 10-year is under 4%. What does that say? It's telling you bullish for the markets. Now, if the 10-year spikes back up, if interest rates spike back up, it will put downward pressure on the market. But I told you yesterday morning, what was I expecting? Monday was going to be red, Tuesday green, Wednesday, Thursday red. Well, so far, so good based on pre-market activity. And then we look at the US dollar, which is 111 and changed yesterday. It's under 111 today. So that again tells you the market could be bullish today. All right, so that goes over the yield. Now let's talk about inside day yesterday on the SPY. What does that mean? So here's a quick chart, okay? Now here are SPY ranges. You can see we started here, 374, 363. Again, there's a 7-point range here, 378 on the low, 385 on the high. Yesterday, all the way here, what did we see? A 3-point range, a very narrow inside day. So what does that mean? It means that you're either poised for a breakout up or a breakdown. Okay, I'm going to tell you also, we had consolidation. I mean, I have a bigger chart there, but we had consolidation on Thursday and consolidation yesterday, which is 2 outflow days. Other from that, it's been 5 straight inflow days on the SPY. So again, long-term bear here, right? Long-term, go out a couple of months. We're headed into recession or things are going to get worse. However, short-term bull. Short-term bull, why not? I mean, we follow the market trends, and I'm going to talk about the SPY and different support levels because we're at a crucial level pre-market as we sit on the SPY. Let's just see where we are right now. We're sitting at the SPY pre-level, pre-market at 390, which makes sense because 389, 390 is a breakout level to the upside. I'm going to talk about that shortly. You got to stay with me, okay? Let's talk about my 3 trades that I entered yesterday, why I entered them, and why I exited them when I did. The first was an Uber put. I knew Uber earnings were coming out this morning. I was thinking earnings would have been bad. I would have been incorrect. However, it's risk versus reward. So I got into my Uber put, and what happened? Uber started dumping, continuation with the market. Everybody knew they had earnings coming out this morning. People were saying, okay, market sentiment negative. Uber going down. Me, I sold. I take a little profit. I took about 10, about 8%, I guess. However, Uber in at 156 went as high as 192. All right. So the math right there is about 25%. Second trade, Microsoft put. Again, same theory, downward trend. Bear guy yesterday. I said red yesterday, green today. So I took a Microsoft put. I'm in at 350. I sold at 350, no profit there. Risk versus reward. I saw the market starting to turn around, and I said, if the market goes bullish, I do not want to be in a Microsoft put fighting the market. What happened about 5 to 10 minutes later? Of course, my Microsoft put went up 20% to $4.25. Would have been a great exit strategy and still secured profit. But again, I would rather be safe. Anybody with a small account, if you think you made a bad decision or you think your trade could go against you, it's okay to take a minimal loss, $5, minimal profit, $10, get out even. It's risk versus reward. Okay, now next, hopefully you guys are waiting for this. It's the new challenge, $500 in the account today. I'm planning on growing that to $10,000 by the end of the year. How am I going to do that? It's little victories. It's taking 40%, 60%, 25%, growing your account 12% a day, 23%. Again, when I took the $100 account 2 weeks ago on Monday, it ended on Wednesday of last week, $100. I ended at $2,500. I mean, I had some killer trades, but the point was I was securing profit. It could have been so much better. It could have been like 4 or 5, 6,000 from $100 in less than 2 weeks, but I was okay. When you enter a trade, know what you're entering at, know what your exit strategy is. So that's the whole point. We're going to have strategy on every single one of the trades. Okay, now earnings and my watch list. Now, I've been mentioning some stocks lately, so I'm going to mention them again, okay? And let me see if I can pull up a chart for you guys so you actually can see it with me. Let me just remove that. Let me add something. Stop sharing. Let's share screen. Let's find my Discord. Here it is. Let's share it. I've got to find it on Discord, so give me a second. I'm very slow on the computer. All right, here we go. Flows and algos. All right, let's do my last search, which should be down here someplace. Yep, okay. So my last search, right, TXN, NetFlow. Okay, here we go. All right, so hopefully you all can see that with me. Make sure it's on the screen. It is not, so we'll add it to the screen. I'll remove myself. Oh, I got to add it to the screen. That would help. There we go. Now I'll remove myself. So I go to the Flow and Algos room. Let me make it a little larger so everybody can see it with me. Enlarge the picture. Okay, so this shows you net premiums versus Texas Instruments. So what can you see where my cursor is right here? 1, 2, 3, 4, 5, 6, 7, 8, 8 straight green days. And ever since this point right here, the premiums on the puts, which is a bearish sentiment, has stayed consistent, whereas the premiums on the calls has shot up and the stock price has shot up. So right there, that is telling me bullish sentiment. And then I go down to my next market search and I look at the flow sum for all the open contracts. And I could be like, wow, it was extremely bearish. Let me just pull this up. Extremely bearish here, here, here. All of a sudden, it switched and the calls were outnumbering the puts and the puts got closed. And we saw the same thing for 2 days straight. So again, that's telling me bearish sentiment. So that's how I use my Flow and Algos room. Whatever trade I'm going to enter into, I want to make sure big money agrees with me. It's like cheating. You heard people say, oh, this is my cheat code. That's my cheat code. I use unusual whales. I use Discord. I use Flows and Algos. I use analytics to tell me where the big money is. If everybody's bet against the stock, guess what? The stock is probably going down. They put downward pressure. They don't enter into options with like hopium. They don't hope their option is going to be correct. When they enter into a play, whether it's a put or call, and you're seeing unusual activity or something like that, there's a full game plan. They're buying their puts or calls. They're selling the opposite. If they're buying puts, they're selling calls, right? Because they work both sides of the trade. And then they manipulate the stock price down by selling into it. Maybe they execute some of their options to get more stock to sell into it. All right, so let's go to the watch list. That was my Texas Instruments. I got into, that was my third trade yesterday. I bought 4 calls. I paid $48 a call. I went out of the money, small account, right? So Texas Instruments trading at 160. I went to the 167.50 calls, knowing that potential upside on a green day could be a few percent, could be like $5. The $48 calls could go up to like $1.90, right? Huge return. We're talking about like hundreds of percent. That's what we do with small accounts. We find a strategy that works. We choose a position. As it was going down, I entered in. I did okay. I didn't really call the bottom because I think it went down like 10% after and then bounced back up right at close. What else do I have on my list? Now, this is interesting. Write this one down because I've never followed this sector before or this ETF. XLI. All right, XLI, industrial select sector. So that's the industrial industries. Why is it important? There was crazy volume on the call side yesterday. Now, it could be a hedge, but based on the action and the volume and the price point, and it's out of the money, I actually think XLI will go higher. Here's just like a quick chart. You can see towards the end, 6 out of 7 inflow days, we've obviously spiked with the market. There's some consolidation. So I have no position there in XLI, but there was definitely an unusual trade of like 30, 40,000 contracts that were bullish on XLI. Then we have DoorDash, okay? I'm not sure actually DoorDash reported yet after hours, but what is it doing pre-market? It's moving with the market. It's up 7%. It lost 7% yesterday, up 7%. I would stay away. Uber, which I expected to miss, is up 12% pre-market. What did I do yesterday? Exit out of my trade, secured profit. Why? Because I don't really follow Uber. I wasn't sure if they would have good earnings or bad earnings. I knew it was on customer growth and revenue streams, and I guess they reported something good. Now, Airbnb, this will be interesting. I think they report either after hours today. So that will be interesting because Airbnb dropped 7% yesterday, is up 3% pre-market. If any company was maybe going to miss, I think it might be Airbnb. So if they went up, let's say they go up 5, 6, 7% today, back to where they were yesterday, I might take a put right before the market closes. Again, if I'm expecting green in the market and I want to buy a put, I want to wait for the top of the market. If the top of the market happens to be 3:55 p.m. today or 3:40 p.m. today, then that is when I would enter a put. Just because you have a strategy and you get anxious and FOMO about the market doesn't mean you have to trade during the day. Yesterday, I felt bad. I was like, I don't have any trades. Don't trust this market. Don't have any trades. And then what happened at noon? The market dropped. Oh, real quick. So then I have GameStop's on here, AMC's on here. Why? Because so many people are talking about that there could be a squeeze again. The SPY is up over 1% pre-market. Okay, interesting. Then I have Chevron and Exxon. Why? Because Biden reached out and he made a public announcement yesterday at noon when the market dropped. And he said these oil companies, these energy companies that have the best earnings and quarters that they've ever had, and they're at all-time highs, better find a way to make energy and gas cheaper. And if they don't, he's considering a tax on the corporations. Well, geez, if he taxes these corporations, understand their earnings are like billions, multiple billions. He would bring in a lot of tax, but that would hurt their earnings. Let's say he takes a small percentage. You're still talking about Exxon, Chevron. If he takes 3%, well, then the stock should go down by 3%. You're talking about a $5, $6, $7 swing. So for the past 2 days, XLE, which is the energy ETF, has been outflow. Okay, it's still going up. The price is going up. Exxon, Chevron going up. However, people are selling into the raise, the increase. Okay, next we have Pinterest. So Pinterest is interesting. Yesterday, pre-market, I mentioned Pinterest tends to top out at about $25.25. What happened yesterday? Market open, Pinterest went to $25.50 and then dropped. Okay, it dropped all the way to $24.55. It was an outflow day. So again, I've seen some selling pressure on Pinterest at 25.25 to 25.50 based on yesterday. It's, what is it, up pre-market? Up 2.2% pre-market at 25 and 14 cents. I would stay away from it because I would be a bear on Pinterest. And again, if the market's green today, then Pinterest could go higher. But the point is, no different levels. Intel, again, I mentioned Intel yesterday, dropped 2%. It's up 1% pre-market. Intel's at $28 right now. Understand, Intel will probably go as long as chips report decently okay. NVIDIA, AMD. Intel will likely go back to the $32 to $33 range where it's had some resistance. So you're talking about a 10% increase. That's my feelings on Intel. Apple I've got on here, Amazon watching it, Micron, another chip player. TDOC, more of a spec play. Yesterday, it spiked out of open. And TDOC, I'll say like TDOC, Affirm, Roblox, more speculative plays. What they did yesterday is they spiked open, dropped, and then they had some support end of day. I only mention that because I almost got into an Affirm option end of day. The stock's like $20.06. I think it's up like 4% this morning. I was going for the $21 calls, which were pretty cheap at the time. I think they were like $1.06. I expect them to be about $1.75 on open. So if I was trading the small account yesterday, that would have been the play. What time would the play have happened? At 3:50 p.m. So again, the only way to follow this $500 challenge that I'm doing is through our Discord. There should be a link below if Carlos did it correctly. And if you follow, once you sign up and verify yourself, you get 7 free days. So don't think that there's going to be a charge or something like that. We want to show you what we do. We want to show you the algorithms and everything like that. Let me just see. You guys have any questions? I see a question about Meta. So let me get rid of the Discord. Let me see if I can bring up the Meta chart. So let me see. Stop sharing. I'm getting better at this. Share screen. Let's share it with the SPY right now, and then we'll go in and we'll change the SPY to Meta. So let's do that. META, Meta Platforms. Let's add it. Boom. Nope, that's Meta. Here we go. Okay, it's on. All right, so let me pull up this chart with you guys real quick. See, I knew it wasn't up there. All right, so we're looking at Meta. Oh, I have to add it. All right, so we're looking at Meta. It should be pretty big. Now we're going to go to the right. I have the 4-hour chart because the 4-hour chart does better on showing us volume. So here's what I'm seeing for Meta. You could see intense volume. I mean, crazy volume. And what I mentioned yesterday pre-market was Meta could be a company that bounced off bad earnings. So we saw bad earnings. We saw $99. Oh, let's go to a better chart than this. Could bounce off, right? $93. It went all the way up to $99. Oh, that's the wrong chart, obviously. Let's go to a 1-hour chart, maybe. Yeah. Okay. So yeah, bounced up to $99, $101, and it's one of those stocks that could go back down. So let me just show you a picture, just so you understand what I'm talking about. And I showed a picture yesterday. Sometimes stocks go down, they come up, and they go back down. So sometimes you have earnings. Stock went down off earnings, right? And then people are like, oh, it bottomed. I'm going to play it. And it worked for Amazon. Amazon is going back up. But most people think when a stock goes down, it fills the gap like that. So Amazon looks to be going back up, whereas Meta, it looks to be worse. Now, why? Because Meta's earnings, Meta's forecasting, Meta's advertising dollars, the amount they're spending on the metaverse is absolutely insane. Now, the crazy thing is, I still know some people, some institutions, because I know institutional traders. So I still know some people that really, really like Meta. And they're talking about 4 and 5 years down the road, Meta's going to be back in its old glory. How Mark Zuckerberg is a genius, how everybody that works around him is a genius. So, I mean, short term, okay. So short term, let's zoom out. Let's say the market stays bullish. We'll give you 2 scenarios. The market stays bullish. We head into the primaries or the elections, which are next week on Tuesday. And then generally after elections through the end of the year, there's generally a bull run. Okay. So if you're bullish on Meta, sure, it could turn around. If the market stays strong and the SPY goes past 400, and again, we're sitting on the SPY at 390 pre-market. Let's say 410. 410 would be good rejection on the SPY. If the SPY runs to 410, Meta's going to run with it. However, I'm more apprehensive. I like to take profit. I like to wait on a good trade. So if I were trading Meta, I would either look to call the bottom on a single day and look for a rebound, or I would look to call the top and saying like I might play Meta into like the Fed's announcement tomorrow afternoon to Thursday. Why? Because if the market gets hit hard, let's just say the Fed is still very hawkish. We're still going to curb inflation. We don't like this. And understand, the Fed is not a supporter of the U.S. market. They don't care what happens in the stock market. They are working on curbing inflation, making things reasonable for the everyday person to buy gas, to buy food. I mean, eggs are up. Candy, we just had Halloween. Candy's up 13% this year. The price of candy is up 13% this year. So again, I would be more cautious on Meta. If you're looking for a turnaround, I might look at Amazon. I might look at a Microsoft, which has just so many revenue sources. But again, my focus today and my focus every day is on part of my screen. I have the 2-year, the 10-year, and the US dollar. I mentioned this at the beginning of the stream. And if you missed it, go back. But the 2-year basically staying consistent. It's at 4.44, right? It's something around that. The 10-year, which was 4.30 last week, is now 3.95. It's down 35 basis points. That is why we're seeing the bullish market move. But you should have these on your screen, because if you see the 2-year and the 10-year spike up, and we're saying like 6 basis points. So the 10-year goes from 395 pre-market, and let's just see where it sits right now. So it goes from 395 pre-market. Yeah, it's still right at 395, but it spikes above 402. All of a sudden, you're going to see the markets go down. So if you see the markets go down, I would say, look at the 2-year, 10-year. I bet you just saw a spike in the rate. So pay attention to that, because if you see that first, you're going to know, okay, the rate just spiked. If I think it's going to stay up there, then the markets are going to go down. Or if you see the rates drop like they did, 430, right? Then it went to 427, 420, 416, 409, 404 on the 10-year. And this morning we're at 395. So of course the markets are going to be bullish. While it's cheaper to invest in our markets, they can stay bullish. Now, when can that change? It could change tomorrow afternoon when the Fed comes out and says 75 basis points, okay? And then they do their press conference on Thursday. All of a sudden, if the 2-year and the 10-year shoot up and the 10-year is back at 4.15, which would be 20 basis points higher, and the 2-year is at like 4.60, which would be like another 17 basis points higher, you understand the market will be crashing. Not saying that, but that's the bearish sentiment. Bearish sentiment is extremely hawkish Fed. Now, what are other people saying? Okay, here's the bull case scenario where the market can continue to run for the remainder of the week. Okay, the Fed comes out tomorrow and they say 75 basis points. In addition to that, they say instead of in December 75 basis points, we're thinking more 25 or 50 basis points. That would be a very direct way to say they're more dovish or they're more calm. Okay. But if they don't use words like that, or any words that make people think that they're talking about lowering rates. So right now we're talking about raising rates. But if someone poses a question to Powell, right, and says, what do you think about Q4? Because they like to look 12 months in advance. If they ask Powell, what do you think about this time next year? Where do you see the rates? And he says something like, this time next year, if everything's going well, if we don't head into recession, if we're doing well with inflation, then we could technically start lowering rates by Q4 of next year. If he makes any comments like that, or comments that could be perceived as more dovish or calm, the market's going to love that, because the market goes 6, 9, 12 months out. So understand, you and I, we're day trading most likely, but the market is long-term investing. The things that push these ETF prices and the stock prices are long-term investors. They're not short-term hedgers that are going in, I'm going to buy 1 million shares of Disney so I can sell 1 million shares of Disney. Next, we've spoken about the dark pool before. Haven't brought it up in a while, but dark pool accounts for over 50% of the trading activity in the market. So first, I'll explain dark pool. Dark pool are trades we don't see, okay? You have 1 million shares of Tesla that you want to buy. What would happen if you tried to buy 1 million shares of Tesla? The price would skyrocket. So what you do is you take this dark pool, which is just a blackened, let's say blackout space, and you say, I want to buy 1 million shares of Tesla, and you're looking around who's trying to sell 1 million shares of Tesla, and they're looking to sell 1 million shares of Tesla at whatever price, 228, and you say, okay, I will pay 228, and you guys make the exchange. Nobody knows about it. It doesn't affect Tesla's price, but understand, over 50% of the volume in the market are trades that you and I really don't know about. Now, I know about them because we have dark pool levels on our Discord, and other people offer dark pool information, and there's probably a Twitter dark pool account that you can follow. But that manipulation, because it's kind of like secretive trading. So you guys look at pre-market and after hours, understand less than 1% of trading activity happens pre-market and after hours. So even when you see a stock spike like Carvana, which is a heavily shorted stock, was up like 9%, or NIO was up 9% pre-market. I would be more apprehensive because less than 1% of trading happens pre-market and after hours. So 1% there, you have over 50% in the dark pool. So what does that leave us to actually view the market? Less than 50%. So when people talk about manipulation, it's not like lying, cheating, and stealing. It's legal ways to manipulate the market. It's legal ways to make trading where it doesn't affect the stock price. Say I thought Uber was going to come out with great earnings or something like that. In the dark pool yesterday, I buy 5 million shares, doesn't affect the stock price because I've got someone that wants to sell it to me. Then, or, inside information, if I got tipped off, we don't know about that. The SEC definitely doesn't investigate, but there's so much insider trading going on. How do I know? I used to work on Wall Street. I used to speak to my friend Nick. Hey, Nick, what are you guys doing? Yo, we heard that Disney might have good earnings and the streaming platform might go up. Really? Who'd you hear that from? Jason. It's collusion. So when you see major actions and unusual options activity, it's usually somebody is tipped off or, subconsciously knows where it's going. All right, with that said, let me just see if we have any other questions. Again, Carlos isn't here today. All right, so again, we've covered it. If you missed this from the beginning, yield curve is most important. Then we had an inside day on the SPY, so it's poised for a breakout. So we'll talk about the SPY ranges right now. Okay, as the SPY is sitting at 390 pre-market, understand the next level's up. Because somebody asked me on Moomoo this morning, hey, what's the top on the SPY today? I'm not looking to guess the top. I'm looking to tell you support and resistance levels. So if we open up 390 and it's a day like yesterday where it goes down, then it goes up to start, okay? And it passes 390 and we see 390 acting as support. Again, it acts as support only if when it breaks under 390, it goes right above it. So people are saying, okay, it's support because they're buying anything under 390. If that is the case, then again, we're at 390 on the SPY. Give you the bull case scenario first. 393 is the next level up. Now, understand, yesterday on the SPY, we traded a 3-point range. So it's more than likely we're going to trade a larger range of 7 points. So once you call the bottom of the SPY, let's just say it's a bull day all day and 390 is the bottom. The top could be 397, 398. It could be a 7 to 8 point range, a 6-point range, 396. All right, you have to know your limits. However, if there's some red involved today and we don't just go straight up, then you have to imply, okay, well, the bottom is 387. If the bottom's 387, the top could be 393. So again, 390 support, next level up, which should act as rejection or could turn into support if it goes higher, is 393 on the SPY. The next level higher than that is 397. And again, write these down for later in the week. Next higher level is 401 and 405. Again, if the whole week turns out to be green, and I'm not saying that, I want to wait on the Fed, but you're talking about 390, 393, 397, 401, 405. At 405, I definitely think there would be some rejection. Nothing goes straight up. And we've had a crazy last month. We did see consolidation on Thursday and yesterday. Consolidation means outflow. After things spike, they have to settle at a new ground. All right, bear case scenario. Fed comes out, they're extremely hawkish. They're like, screw this, 75 basis points in December, and we're going through with our plans, and we're reducing using QE and all these things. We're reducing the budget, $3 billion a month or whatever they're looking at. I think it's $995 million a month. But anyway, if they come out and they're extremely aggressive, and what we're seeing now is a pump before a dump, then here are your levels of the SPY. Because today could be green and we could finish on the SPY at 393 or 394, understanding it could get ugly later in the week. So again, gave you the bull scenario. Here's the bear case scenario. Bear case scenario is Fed's extremely hawkish. They're going to raise rates. Maybe somebody says 75 basis points in December. Okay, you're back at the 390 level, 393. Let's say you close here. Then you go to 390. If you break support and it goes under 390, and again, this can happen today, but I don't think so, you're going to go to 387. Again, if it breaks support, you're going to see 385, which has been support the past couple of days. But again, if the Fed is extremely hawkish and the markets turn on themselves, again, I'm only giving you a bear case scenario, then you see 385 won't hold. Then you got 381 and 377. All right. I mentioned 377 because I mentioned that the other day. That was my bear case scenario. Bear case scenario, zooming out, the market flips, we go back to 377 on the SPY, okay? Bull case scenario, Fed comes out less hawkish, right? More dovish. Stocks keep getting bought up this week. My level on the SPY end of week, beginning of next week, 403, 404, which is 14 points higher than where we are now, which would be like close to 4%. So again, bull case scenario, 4% higher. Bear case scenario, 4% lower. Listen and watch the Fed. Watch the market's reaction. Again, if you're on our Discord, go type in TR-net flow market, and it gives you the market net flow as a whole. So you can see where the put premiums are, where the call premiums are, and where the stock price is for the market. It's the easiest thing. It's like a cheat code. Again, 7 free days if you join our Discord. Oh, I haven't mentioned it. If you use the Moomoo link below, quick 40%, all right? For anybody interested, you deposit $100. Use our link below. Deposit $100, okay? You get 5 free stocks. They're probably going to be worth about $30. I made a whole video about it. You get a $10 coupon as long as you sign up before December 20th. Well, that's another like 60 days, right? So you have plenty of time. So you get $30, $10, that's $40. You put in 100, you don't have to trade, and you have $140. That's 40%. So if you have a small account, you're like, okay, I'll set up this account. I'll trade it next year. By next year, I'll put in $100 November 1st today. January 1st, when I decide I want to trade next year, guess what? It's going to be $140. I made 40%. I don't have to do diddly. Okay, so that's Moomoo, SPY ranges. If you want to be part of my challenge, you're going to have to be on Discord. Again, for anybody following, I have one channel on Discord. That's where I drop my morning video. That's where I drop my updated information. And that's where I drop all my trades. And if I decide to get out of trade, that's where I drop it. And if I'm thinking about things, that's where I put it. Hey, here's my exit strategy. I'm changing my exit strategy. Now I'm thinking about this or that. I put everything in one channel. That way, it's not like, oh, I had to find it over here and then look over here. If you're interested in that, you go up, you go down. With that said, let's have a fantastic day. I'm heading to Discord now. Going to shoot a pre-market video, a little synopsis of what we spoke about.